Whatever you do, do not renew your mortgage until you've watched this one. When your mortgage is coming up for renewal, your lender will typically send you a letter with a list of rates and terms, ask you to initial one of them and send it back in order to renew your mortgage. Whatever you do, don't do this. When your mortgage is coming up for renewal, anywhere from 6 months to a few weeks prior to the renewal date, your lender will send you a letter with an offer to renew the mortgage. The rates and terms they offer on these letters are sometimes competitive, but normally they're not. You're also not able to make any changes except for what your normal prepayment privileges would allow. When you get a renewal letter from a lender, remember that you can always try to negotiate the rates they put on there. To negotiate from a position of strength, you should know what other lenders have to offer for the same terms. Remember that when you're surveying other lenders, you won't be eligible for most advertised rates, so make sure you understand exactly what rate you're eligible for. When you go back to your existing lender, have to remember that you might not get anywhere with them, and they're very limited in the changes that you can make when you do this. This of course leads to the obvious alternative of considering moving to another lender. This should be done sort of 120 days in advance, the normal rate hold period, but you'll get the best rates because you're actively shopping. Also, because a lender will commit to you, but you're not quite committed to them, if rates do go down again, you'll be able to apply with another lender for an even better rate. Now normally when you go to another lender, you'll require full documentation and have to requalify. However, requalification is normally done at the original grandfathered qualification rules. Now normally when you go to another lender, you'll have to supply them with all your original documentation. Updated, of course. This means new job letters, new taxes, new pay stubs, all that kind of stuff. Old stuff like divorce agreements, child support agreements, that type of stuff, normally you can just use the old one. When you're doing this, if you're making no changes or very few changes, you're going to get the very best rates and save on legal fees. If you're doing a direct transfer, such as we talked about in the transfer video, the new lender will often pay the legal fees themselves. Also, if you want to make a material change to your mortgage, such as increasing the amortization to reduce payments, or increasing the balance to roll in a line of credit, credit cards, or a car loan, this is going to be the best time to do it. If you only take one thing away from this video, let it be to never, ever, ever sign back a lender's initial mortgage renewal offer. It always pays to shop around. Even if you don't move your mortgage to a new lender, you'll almost always get a better deal with your existing lender. Finally, consult with your mortgage broker. There's new products and rates coming on the market all the time, and you may not even know what's out there which could best fit your needs. Have a great day.